Well, I caught a falling knife. And no, I'm not referring to my voice, even though it does sound like I swallowed a knife. I've recently picked up Brazilian Jiu-Jitsu as a hobby, and I got choked out pretty hard last night. So I apologize that you won't be getting my usual sweet melodic voice. I am straining right now, and this is what it sounds like if I don't strain. So, bear with me. In case you haven't heard the term before, catching a falling knife is a term used in investing when someone buys something after it falls in price, but it hasn't stopped falling yet. And this sucks when it happens, but it does happen. Here's the backstory, and here's what I'm doing about it. A few weeks ago, I put $30,000 into Lululemon after they reported their Q1 results and the stock plummeted over weak guidance. I've always liked the company's products. If you can't tell, I work from home and wear their clothing every day. It's unintentionally in all of my videos. After I purchased, the stock initially rose 10%, but then the stock fell and is continuing to fall, hence the falling knife. It is now the worst performing stock in the S&P 500. And just as a quick aside, that's the purpose of this channel. I don't want to be just another talking head sharing random stock ideas, but I actually want to show you how I'm investing $100,000 of my own money in the wide open public, both when it's good and when it's bad. I'm doing this because I believe there is power in making stock analysis and discussion more social. If you want to make your own analysis more social, consider joining our Discord, where we are giving early access to the Flank platform. We're first releasing to the Discord community so that we can get as much feedback as possible before we release the platform to the wild. Okay, back to Lulu. So the first question I'm asking myself is, why has Lulu continued to fall after I bought? They reported earnings and got gobsmacked off of weak guidance, although they did hit expectations. It's kind of hard to pinpoint why the stock has continued to fall, but a possible explanation could be the recent departure of longtime Chief Product Officer Sun Cho. But here's the thing. When you stop and think about it, nothing else has really changed at the company since I bought. Lululemon hasn't had a chance to report quarterly results yet. That's how short of a time I've owned this company. They do report earnings later this week, so by the time this airs, we will have a better idea of where the business is going. And I'm not necessarily expecting it to be a blowout quarter. A chief product officer doesn't leave in the middle of a blowout quarter. Until they do report, my investing thesis hasn't changed at all. But I do have some lessons learned because it's not really fun to have a stock move against you so drastically. And frankly, I obviously wish I would have waited a little bit longer and bought at the price it's currently trading at. The biggest thing I wish I would have done differently is that I should have become more familiar with the apparel industry. I may have underappreciated how quickly the fashion industry can change. And that's my biggest lesson learned from this investment so far. Before I invest in a company, I need to understand the industry. I knew this, but I've invested in my safe space of technology for so long that I fell into a bit of a trap. Since technology is a pretty specialized industry to understand, I assumed that retail would be an easy industry to understand because at the end of the day, all you're doing is overseeing the production and sale of garments. When I look back at my analysis, I was a bit myopic on the company, and I didn't really consider that was my first time investing in a fashion company. So here's what I'm doing. I've been spending these past few weeks reading everything I can find on the fashion industry. It's fascinating, and consumer demand definitely can change on a dime. But I still think that athleisure, specifically technical luxury athleisure, will continue to grow. And Lululemon has a bit of a moat here with their brand and products. For instance, we heard from a user on Reddit that his wife has POTS syndrome and has tried every type of legging to help alleviate her symptoms, but only Lululemon was able to actually help her. Or this woman who found a running top that allowed her to comfortably run.
If you wear one that doesn't fit right, this is what can happen. Unfortunately, speaking from experience. When I see girls running down the street in this style of Lulu bra, a little tear rolls down my cheek because I'm about to show the ugly, supportive version of this. This is the only bra I'll run in. It is from Lulu and it does still have the strappy back. It's one of their high support bras specifically for girls with bigger cup. Here it is on. I wanted to show a fun bra versus a practical bra because I'm strapped in here. Let's show some balance. So that's like Probably the best I can get. It's worth the investment because this is the only sports bra I feel comfortable doing running and high intensity workouts in.
And there's way more testimonials.
I work out every single day, and Lulu is like one of my go-to staples, holy grail fitness brands. I put this stuff to the test. I do the absolute most. And every now and then, I'll do a little too much and like rip a seam, or the other day I got a hole in my butt. I don't know how. We're not going to talk about it. And I brought it to Lulu, traded in. They gave me a brand spanking new pair. If that's not good customer service, I literally do not know what is.
We also found this article from the Wall Street Journal on the stickiness of their brand, saying that even your mom can't make Lululemon uncool. Then there's this review that compares a tennis skirt from one of Lululemon's younger, hipper competitors called Aloe, where Lulu's tennis skirt completely demolishes Aloe's. And so the company is still creating technical products that serve more than just the function of looking good. And consumers love their products in general, and so the company is able to sell at enviable prices relative to the rest of the industry. This is still a great company in my opinion. This doesn't necessarily indicate to me that fashion senses are changing on a dime, leaving Lululemon in the dust. If we look at the social media following of them and other competitors, the Lululemon subreddit has 542,000 members. Their Instagram has almost 5 million followers. Compare that to their smaller competition, namely Aloe and Vuori. Aloe only has 7,100 followers on Reddit and 2 million on Instagram, where Vuori only has 5,100 on Reddit and 744,000 on Instagram. So from a brand management standpoint, there's no question in my opinion that Lulu is holding strong. And they still have room to grow. Nike has 300 million on Instagram and 1 million on Reddit. However, this social media following might not satisfy bearish analysts' concern over Lululemon. I think their point wouldn't be what Lululemon has built, but rather how quickly fashion can fall out of favor with consumers. During my industry research, I watched a documentary called White Hot: The Rise and Fall of Abercrombie. If you were around in the early 2000s, you know how big of a deal Abercrombie was. Everyone was wearing it back then, until they weren't. And one scene in the documentary really stuck out to me. One of the brand's executives pointed out that the moment he knew the industry was moving against Abercrombie was when he went to go see the original Spider-Man back in 2001. During the high school fight scene against Flash, who is usually described as a meathead villainous jock,
I don't want to fight you, Flash. I wouldn't want to fight me neither.
the costume designers for the movie decided to dress him head to toe in Abercrombie. But based on looking at product reviews and discussions happening online, I don't see this happening at Lululemon right now. But I do think some things need to change within the company. I have one major request. If we look at the largest apparel companies in the world, it's obvious who wins. It's luxury. We have LVMH on top at almost $400 billion. They own luxury brands such as Louis Vuitton, Dior, Sephora, Fendi, Tag, Tiffany & Co. And then in second place, we have Hermes with $247 billion in market cap, followed by Inditex, which owns Zara and other smaller brands. But even though Zara is a fast fashion brand, it's clear that when we look at the rest of the list, that the top players are one of two. Either the lowest of low discount retailers, aka fast fashion, who end up having a horrible effect on the climate and have multiple human rights violations in their manufacturing plants, occurring over and over again, or we have luxury brands, which in general treat employees and suppliers better. And when they don't, we have every reason to boycott these brands. They have the margins to do better. I haven't arrived at this conclusion in a vacuum either. As another part of my industry research, I came across a report written in late 2023 by the consulting company McKinsey. They predict a 2 to 4% growth rate of regular fashion, but a 3 to 5% growth rate of luxury fashion. And when I look back to my patron saints of investing, I can see that famous investors have made this mistake before. Here's Charlie Munger.
Yeah, but I don't like style companies.
Too fad-driven?
Well, I suppose if Arby Hermes is a cheap enough price, I'd buy it. But short of that, I'm going to buy any style company.
Ooh, that's a good pick.
To the style point, another one that they covered was LVMH. What Arnault has done has been amazing. So what do you make of that company?
Well, if you're as good as they are, what they've done, you have a lifetime to do it in, or now a lifetime, really 3 or 4 lifetimes to do it in. You can create another, but it's not easy.
Hermes is on the 8th generation, I think now, the family running it.
It's not a bit easy. They have meetings every day where they make policy decisions, and they choose the locations one at a time, and it's work.
It's definitely work. What do you think the durable value is in these, as you say, style companies, of the very best one in the world, the Hermes or the LVMH? What makes them enduring?
Well, they just got a brand people trust so much.
Hmm.
It took them a century to do it.
So it's clear that the company must stay focused on erring towards the luxury side of retail and not take the easy road into discounting and cheapening the quality of their products. Doing so will result in a race to the bottom. And that is a tempting fruit. I can absolutely see why Lululemon CEO Calvin McDonald would want to take that easy road. It would help improve volume in the short run by selling Lulu clothing at a discount. But this isn't a long-term plan, because one of the reasons I and other investors invested in Lululemon is because of their juicy margins. They must protect their brand and subsequently those margins at all costs, even if that means short-term pain. And this gets into one of our superpowers as individual investors. I'm investing my money and my money alone. I don't need to worry about making anyone else happy and can absolutely ride this hard wave until my thesis changes. As I mentioned earlier, my investment in Lululemon is still relatively new, and so right now I have no plans to adjust my position. I still believe in my original analysis, and since I'm a long-term Buffett-style investor, this short-term hiccup does not have me hitting the panic button yet. The very last thing I'm doing is I'm taking these recommendations and putting them in a letter to Calvin McDonald. I believe he is well positioned to lead Lululemon out of this trying period, as he was the former CEO of Sephora, which, as we mentioned before, is owned by LVMH, the top player in luxury. Let's see if he responds to his individual investors. This isn't the first time I've written a letter to the CEO of one of my companies, and it's a bit of a mixed bag if the CEO replies, or if it's one of his lieutenants, or if I get a response at all. And if I don't get a response, it's my experience that that company doesn't really care about their investors. While I continue to keep an eye on Lululemon and adjust my thesis accordingly, I still have about $60,000 in my fund ready to deploy today, so I'm still researching and looking for my next company to invest in. Right now, I'm just scoping out the potential of other companies, and I wanted to check out Airbnb. The company went public at the end of 2020 and has been more or less flat since they IPO'd. I am familiar with their product both as a traveler and as a host. I've been Airbnb-ing the first floor of my house, I live at the beach, for almost 3 years. It's honestly a fantastic value proposition. I get to meet a ton of new people, and I've never paid my mortgage. In fact, the Airbnb has consistently generated about 125% of the total cost of ownership of my house. So, in effect, I'm getting paid to live in my house. You can see my analysis on the Flanks platform. I completed the first section of our research framework, Understanding the Business. Fortunately, Airbnb is a simple business to understand, and we love simple businesses. And I think the big question that I need to answer before I move forward with Airbnb is if it's trading at the right price. It's right around the $100 billion market cap, and what their future growth plans are. They've grown pretty substantially since they've IPO'd, but what is the ceiling? What is their total addressable market? I don't know the answer to this. I know that they have some really ambitious plans with artificial intelligence, and I can absolutely see them being the first ones to get this right in the travel sector. But I definitely have a lot more homework to do. If you've studied Airbnb before, please let me know in the comments or in our Discord what you think. That's all for this episode. I hope you enjoyed it, and we'll see you in the next one.